Hey everyone, welcome back. Today we're looking at Trulieve, which is a company that I have invested in before and I still hold a small investment in this company. Let me go through why I made that investment and why I'm still holding that investment, which might surprise many of you out there. So let's jump into Trulieve. They are another MSO, so multi-state operator of the cannabis industry in America. They made a large acquisition. I think it was the largest acquisition in cannabis back in 2021 when they acquired a company called Harvest Health. And since then, it has been quite a slow, painful road to integrating these two businesses and optimizing the operations. Did I like the deal? Well, at the moment, no, I don't like the deal. I think they overpaid. I think it's going to be value destructive overall, but hindsight is not probably fair on this one because I'm looking at through today's market, and since everything has been absolutely crushed, if they were to go out and buy Harvest Health today, it would probably worth, they paid like $2 billion for it, I think 2.1 billion. It's probably worth 400 million today. So that's very value destructive, but again, hindsight bias is a wonderful thing, but this thing might shake out a little differently longer term. I feel like it's going to be value destructive, and at least it's a poor distraction at the moment for Trulieve as well, but it could actually play out okay because if the market rebounds and Trulieve is actually a successful company here, having the larger footprint of Harvest Health could be beneficial. Time will tell. Trulieve were able to secure debt though on pretty good terms at 8% interest rates. And in the cannabis industry, that's pretty good. So they don't have access to traditional financing options. So getting it at 8% and locking that in was pretty smart. It would cost a lot more today to get the funding, and capital has become very difficult to get. So locking it in at 8% a year ago was a pretty good deal. Similar to Curaleaf though, Trulieve have had to pull some of their operations from unprofitable locations. So oversupply dynamics have crushed many retail stores in certain states. California is the big example here. I don't think this was ever a big problem for Trulieve as it only had a small number of stores in California. Some of them were old Harvest Health stores. Unlike Curaleaf that expanded too quickly and now are selling off parts to focus down, Trulieve I think already quite focused. Well, focus as you can see in Florida in particular, which is they have huge footprint in Florida. I think this was a better idea than Curaleaf because I think they were building credibility in Florida first before trying to go into all the other states. That was a pretty good move. I think they can rely on that footprint and reputation in Florida to help them. That's sort of their bread and butter. They have over 40% market share in their home state, which is strong. But Green Thumb are actually just going to start coming into Florida and starting to compete. There are other strong competition in the space as well. I don't think Trulieve have a strong enough foothold to crush entrants. So I actually think they're just going to get diluted here. So that 40% market share might pull down to 30% or something like that. That's what I think is more likely to what's going to happen because I don't think Trulieve have a strong enough brand. And to reiterate that point, they said that in the conference calls that pricing pressure, that is something that they're struggling with, similar to Curaleaf. To me, that means they don't have pricing power, so they don't have a competitive advantage. Now, like the whole cannabis space, in particular the MSOs, these multi-state operators, they do have some tailwinds coming that will essentially rise all the boats in the water. Safe banking laws passing because they can't access banking systems at the moment. You can't even pay on your credit card at the moment. So there's lots of things that will help if they can get just safe banking laws to go through. Then legalization across states, especially in Florida, because at the moment it's only medical. If Florida can go adult use, it will likely 3x their revenue of this business, and that'll happen very quickly. So there's quite a big catalyst there just for Florida. And then if you get federal legalization, well, that's going to improve the revenue of this business very substantially. The big thing will be tax breaks on this 280E, where at the moment, tax is taken out on their gross profit, so they essentially don't get to write off any of their expenses in a business. That makes things extremely difficult to run, very difficult to turn a profit. And essentially, by looking at it like this, cash will gush from this business if this 280E was removed. So that's something that's a nice catalyst to look forward to in the future, but I don't know when that's going to happen. It could be 10 years away, who knows? But at the end of the day, to me, they're just trying to grow a brand. And to have a great brand, you need consistency. And I'm not confident with Trulieve's consistency. I've used this example before, but imagine something like Panadol, like a painkiller. Imagine if you were getting different quality Panadol tablets every time you took it. So you had a headache, you took your Panadol tablets and it fixed it. Next time it didn't work. You would lose trust in that brand really quickly. And for a company that is trying to build up brands like all these MSOs are trying to do, consumers are just too fickle. Preferences are always changing. Consistency has to be top notch just to have a chance. And I'm not confident with any of those things with Trulieve or any of the MSOs for that matter. So my big argument against this MSO and the other MSOs is that I don't see a clear competitive advantage except for their dominant position in Florida. But again, that can be diluted quite easily with increased competition. Competition is fierce. And the first video I did in this little MSO series was on Trulieve, and Trulieve are going to focus on pretty much the same things: inventory management, controls, spending more money on lobbying politicians to try to get some of those catalysts to come to fruition. I think that's wasting money personally. Not all the businesses are going to do this, but Trulieve, I guess, are leading the way here in funding lobbyists. I don't know what I think about that personally. I think it's a waste of money, but anyway, they're going to focus down on profitability and free cash flow. Kim Rivers, the CEO, said that in 2023, they will be going cash flow positive again since that Harvest Health acquisition. But I'll be honest, her word doesn't mean a whole lot to me at the moment. We'll be watching to see if this plays out like she said, but she said it multiple times now, and I guess we'll have to wait and see. And my thesis when I invested in Trulieve a little over a year ago, it might have been nearly 2 years ago now, was that I felt that the Harvest Health acquisition was actually going to be successful, and this would be a good investment. If safe banking changes went through, this would be a great investment. If federal legalization went through, this would be a great investment. If the 280E got removed, this would be a great investment. I felt like there were multiple ways for me to win here. And while I wait, I thought that they would be smart enough not to let things fall apart. So I think the thesis is actually still intact, even though the stock price suggests otherwise. But I'm actually not that phased. I made a mistake, but I think I would be compounding that mistake by selling out of this now. I think a lot of the industry is just quite short-term minded on this, and I guess that's fair enough. Now, like I said, at the time of making the decision, I think it was a mistake to invest in this company, not because the share price has gone down, but because I was lukewarm about management and management's performance and their track record. I don't think much of the strategy, as I haven't done enough work on the culture of their business internally. I don't know it that well. But when I look at valuation metrics at the moment, I think it would be quite silly to sell, as the thesis is actually still okay. I'll know if it's broken in about February 2024 when the full year results for 2023 are out, whether they do indeed get back to cash flow positive. So some of you might ask me, would I invest in this today at the current prices considering they're a fraction of what I paid? No. Definitely not, because I'm neutral on management. I don't understand the culture internally there. I don't understand their quality control of the cannabis they're producing. I would not be adding to this position. It's a hold for me for now. I also think there are actually better managed and better opportunities in the cannabis space, which I'll get to in other videos. But some of the metrics that keep me interested are that gross margins are 54%, stronger than the other MSOs. Their operating margin is low, but they're still trying to integrate that Harvest Health acquisition. But the fact that operating margins are positive is a good sign. They're about 760 million market cap at the moment. Price to sales at just 0.6, EV to EBIT at 15. EV to EBITDA at only 5. They are still dominant in Florida, and if Florida changes to adult use, this thing goes up very quickly. Their debt to equity is actually pretty good. Debt to EBITDA is, well, that EBITDA needs to kind of get going a little bit because of the integration of the acquisition of Harvest Health and the pricing pressure and things like that. So debt doesn't look that great to EBITDA, but debt to equity is quite good. Stock-based compensation is actually medium. It's not great. It should be, I wish it was lower. The salary of Kim Rivers is quite high with her bonuses. At least her bonuses have come down this year, which was good, but her insider ownership is very high. So my opinion is that, well, no one really wants this stock. It's been kind of cast aside, probably fair enough, but I think the cycle will turn at some stage. And if Trulieve can hold the level they're at without losing too much equity, which I think they can, well, there are just too many catalysts for me to give up now. Am I a bag holder on this? Maybe. Let's see how this all unfolds. I think the odds are in my favor, but I do understand it's still a gamble. All right, here's my little MSO tier list, and I'm ranking Trulieve today, and we've got Green Thumb and Curaleaf already ranked. Where do I put Trulieve? I'm actually going to put them... I was tossing up of putting it on the B tier, but I'm actually thinking it's maybe not quite as good as Green Thumb. It's somewhere around Green Thumb anyway. I would feel comfortable with Trulieve around there next to Green Thumb on the C tier. Look, I don't think they have a competitive advantage. So the fact that like Florida doesn't really count, I think it's going to get it could get easily diluted and competed away. I don't feel like they have strong brands. I'm not that confident with the culture. They pulls it all the way down to a C pretty easily. All the other things like price and all the catalysts and things like that, I think that just keeps them in the middle of the game here, somewhere around the C tier. That's where I feel comfortable, in line with Green Thumb. I would say Green Thumb and Trulieve are, they have their pros and cons to both, but I feel okay with them at about the same level. They're definitely above Curaleaf anyway. Now, to access the cannabis stocks, you need access to the OTC markets, which I use through Interactive Brokers. There's a link in the description below for that. I've got demo videos here on the channel of how to use it, but Trulieve is what I bought that through Interactive Brokers. So yeah, Interactive Brokers is my recommendation, the one that I use, and very happy with that. I hope you've enjoyed this video, and I'll see you in the next video where we're going to take a look at Verano.